Quasi Quartang. All right, so I want to maybe just talk very, very briefly and give a little bit of context around mortgage rates this week. I think it shouldn't be a surprise to anybody to know that mortgage rates are basically soared this week. And I want to provide a little bit of context for you guys around what's going on. And I do want to offer maybe some words of wisdom because I think this is really, really important. Let me just adjust this quickly, 1 second. I think it's really, really important right now for us to have our feet on the ground and firmly focused on some of the things that we can do to make our future situation a little bit better. This is a bit of a disaster, if I'm completely honest, because if you look at the mortgage rates and you look at the mortgage rate curve, which is essentially this little thing right here, what we're seeing is mortgage rates get into levels that we've not seen for over a decade, for almost 14 to 18 years now. And the unfortunate thing is, as this curve continues to climb steeply, there is going to be a lot of pain for UK households. Now, I think it's important just maybe to go back a little bit and actually reference maybe 2007, 2008, because what we saw back in 2007 and 2008 was essentially a situation where we had a global financial crisis, right? Markets crashed, property prices crashed, everything crashed. And one of the main reasons why people were able to survive, well, by the skin of their teeth, was that a lot of people still had a bit of disposable income that they could call upon to get them out of a sticky wicket, right? Back then. The situation that we're facing now is quite different. And I'm not saying that there's going to be a market crash at the level of 2007, 2008. I'm not saying that there's going to be a property crash at the same of 2007, 2008. But the circumstances that we're facing right now are actually quite unique in the fact that we have energy prices increasing, fuel prices increasing, wages aren't keeping up, inflation is out of control. Now, what we're now seeing is interest rates get into unprecedented levels not seen for a very, very long time. And this is the problem that we face right now. So, with inflation increasing, well, let's forget inflation and speak more specifically about energy costs, fuel costs, and food costs. With those three things increasing, what's basically happened is people have less disposable income, right? So now we're in a position where there's less disposable income. We've got interest rates going up, pushing up mortgage rates. And this isn't just about people who actually own their properties right now. Renters are likely going to see the knock on effect of this because as landlords start to look at things and start thinking, well, actually, my costs have gone up, it is very, very likely that they're going to start pushing up rents as well. So everyone's going to get hit by this. Now, the level at which these interest rates are increasing is actually a little bit staggering. So if you go back probably 3 weeks ago, it was forecast that mortgage rates were probably going to be about 4.5% by this time next year. So still quite a big jump, but given the fact that we've seen the Bank of England base rate increase quite significantly over the last 7 to 8 months, roughly, 4.5% was about right for what they were thinking of. And in this graph right here, you can see the average kind of there, right, in terms of what was actually available on the market based on these current rates right now. What we're seeing now is that with obviously the mini budget last week, the week before, and the pound falling off, a cliff, what we're now seeing is potentially mortgage rates forecast to be about 5.5%, maybe 6% a year by next year. Now, what does that actually mean? So the news today is basically going through and basically announcing that the average rate on a 2-year fixed rate mortgage is now 6.07%. Now, I don't know about you, but the first thing that I think about here is first-time buyers. Now, I don't know what this rate is actually on and whether this is based on a loan to value of 90% or loan to value of 95%. But my heart goes out to first-time buyers right now, because if you're a first-time buyer looking at mortgage rates right now, it is likely that you're going to be looking at mortgage rates in the 5 to 6% rate. And that is going to push up your mortgage payments, and it's also going to impact your affordability in terms of what you can actually afford for the mortgage. That puts more pressure on the fact that you're going to need a higher deposit. And deposit, as we already know, is already hard to come by as it currently is. That's first time buyers. Now, for people who are already fixed in mortgages, they might have mortgages already. There are 2 million fixed rate mortgages that are going to be coming out of their fixed rate in 12 months' time. So through 2023. I'm actually one of them. So on Tuesday, I did a video talking about paying early repayment charges, ditching your fixed rate. That may be a consideration for a lot of people now, because if mortgage rates, the interest rates continue to go up and mortgage rates continue to increase, what we are going to see is this environment where food prices increase, energy prices increase, you have a squeeze on your disposable income. And what's going to happen is, because rents, mortgage prices start to increase, people who don't already have disposable income are going to be struggling even more. So this is a really, really difficult position right now. And I think this is only going to get worse. I am interested to see what the inflation numbers are going to be saying this month and through the rest of the year. OPEC this week cutting oil production to 2 million by 2 million barrels. I think they cut the oil production by this week. That is going to hurt energy prices even more. Energy prices have been the main catalyst for the inflation numbers we have been seeing. So I'm really keen to see what's going to be happening with mortgage rates, with inflation rates, and as a result of that, what the Bank of England is going to have to do to combat that inflation impacting mortgage rates, impacting potentially rents. Currently in the UK, we're not doing what they're doing in Scotland and basically saying that landlords cannot now have a cap on the rents that they can charge. They can't just increase their rents because their mortgage payments have gone up. We're not doing that here in the UK. Whether or not that will be something that we consider, I don't know. But this is going to get extremely difficult considering what we have. So I always like to make sure that I give maybe some useful information. And these are maybe just some considerations that I would like everyone to maybe consider, whether you're watching this live or you're watching this on a replay. These are things that you need to be thinking about doing yesterday. I'm going to start with the boring stuff first. And I know that you would have heard this across this channel, other channels, and it's boring, it's mundane, but it's fundamentally important. You need to be really, really sure that you're trying to conserve as much of your money as you possibly can right now. Seriously, if you're spending money on things that don't really matter, that you don't need, that stuff needs to go, because as these prices and as interest rates start to increase, you may need to call on that money. That's first and foremost, that's the boring stuff, right? The second thing that I'm going to say is, if you've got debt, I would seriously consider thinking about how you're going to manage and combat and reduce your debt quite significantly, or within a structured manner. Okay, so what I mean by that is, if you do have credit card debt and you're paying interest on that credit card, you need to be thinking about getting onto a 0% balance transfer for as long as you possibly can. 12 months, 18 months, 24 months. Go and look for a deal right now. That a little bit extra that you're not going to be paying in interest, you might need a bit later on. Also within debts, if there is a way for you to potentially consolidate your debts, try and get all of your debts. So for example, if you've got credit cards, loans, mortgage, you might want to consider seeing if you can get it into a consolidation. So one type of debt that you're paying. And that could be consolidating onto your mortgage. That could be consolidating into a personal loan. But trying to get it into one payment that will give you a reduced rate of interest so that your monthly payments are ultimately less as well. Really, really important. You need to try and conserve as much of your capital, as much as you're earning really, as you possibly can. And consolidation might be a really, really good way of actually doing that. If you're going to do that on a mortgage, obviously just bear in mind that in the long run, it could possibly cost you more money, because even though the mortgage rate will be less, and it will significantly reduce your monthly payments. You're borrowing that money over a longer period of time. So, from an interest point of view, you could end up paying more if you consolidate onto a mortgage than if you did any other form of a loan, like a personal loan that might be for 5 years or 3 years or 4 years or whatever that might be. Bear that in mind. It's likely that a personal loan is going to be more expensive than a mortgage, though, if you are able to consolidate onto a mortgage. But now would be the time to really, really think about trying to pay down debt so that you can free up your resource or the resource of your monthly income, because debt is this thing that, yes, we do need it, obviously, but generally speaking, it is a drain on your monthly income. So if you can free some of that up, that's going to be really, really important. Next thing, and I know this is boring, and I know that I've said this so many times before, and people are like, Pete, we've heard you, say this a million times, but emergency fund. Right, really, I don't care if it's 100 quid, 200 quid, try and get something set aside to give you a little bit of a cushion. The next thing, and again, people will be talking about this all the time, but I had a conversation with someone on Instagram about this literally last week, and I think it's more valid now than ever. You really need to figure out how you can actually increase your income if you can. And that could be by a function of side hustles, by, I don't know, as dog walking, copywriting, if you're good with a camera, photography work, if you can fly a drone, fly in a drone, whatever it might be. If you've got something that you're passionate about, even better. But trying to increase your income right now, I think, is something that everybody needs to try and do. If we learn anything from COVID and the pandemic, is that we can't really depend on one source of income. So if you have got something, anything at all, you can rent out parking spaces. There's lots of things that you can basically do. Sell things that you don't need anymore. You need to increase the amount of money that you have so you can put it into a nest egg for you to use. What else is there that I would think of? I did write a couple of things down. What did I put down here? I do first-time buyers. Maybe I need to do a separate video for first-time buyers specifically. And I will do a video specifically for first-time buyers, because these mortgage rates are just ridiculous, and it's going to be extremely difficult. It's going to put a hurdle in place. The positive side to this, if I can find some kind of silver lining, is I was speaking to one of my friends yesterday who's an advisor, and he's been speaking to a lot of his clients, people who actually have buy-to-let portfolios. It's getting to the point where people who have buy-to-lets, who have dabbled into buy-to-lets, are now thinking, actually, you know what, this isn't even worth it. Mortgage payments are going up, which means that either they have to increase rents for their tenants, but also alongside this, they've got servicing costs. They've probably taken out a life insurance policy to cover the mortgage, right? They have to put a pot of money aside for just miscellaneous things, boiler goes bust, all this kind of stuff. And for a lot of them, their rental yield is just becoming razor thin. And a lot of them are thinking, actually, you know what, I'm just going to sell up whilst the market's still good and get out. If there is a silver lining, the silver lining is that potentially that will drive more properties into the market for first-time buyers. That could help with property prices coming down a little bit. But when you juxtapose this with the fact that an average two-year fixed rate mortgage is now 6%, and I don't know the loan to value on that, I hope that is based on a 90% loan to value, 95% loan to value. It probably isn't, but at a 95%, 90% loan to value for first time buyers, I hate to think what those rates will actually be right now, because the risk is a lot higher for the lender. So they're going to try and charge a little bit more to make sure that they're able to cover the downside risk for them. It's really, really, really scary right now. And so if you are in a mortgage and you're not fixed right now, you really should be considering fixing. I know people are on standard variable rates. Some of the standard variable rates are lower than fixed rates that are currently available on the market. But if these rates continue to go up, and I expect that they will, you're going to see your mortgage payments go up. And by the time you finally decide that you want to fix, you might be fixing into something like 7-8%. It's scary right now. And I think little things that we can do to ensure that we are able to secure our own financial space is so important. Nobody's going to do it for us. No one's going to do it for you. It is your responsibility to do it. And I hope that these few little tips have been helpful in some way, shape, or form. I know I talk about the boring stuff, but at the end of the day, you can't build anything if you have shaky foundations. And some of the budgeting stuff, emergency fund stuff that I talk about is absolutely crucial, because on top of that, you build everything else. You can't do anything without strong foundations. So it is what it is. I'm fearful for where the interest rates are going to go. If I'm completely honest, um, I'm quite fearful. I mean, we could get to the point where we're going to see mortgage rates of 8, 9, 10%, double digits. That for many people will be catastrophic. And let's not jinx it. I hope that I'm wrong. I hope that there can be some kind of intervention. But in order for interest rates to stop going up, inflation has to come down. And it's simple things like, if you're following the politics, energy rationing. That's what's going to have to happen. And, Ofgem has come out this week to say they're planning potentially 3-hour blackout periods. That is a real possibility. And while Liz Truss said, she can rule that out, I'm sorry, it's not within your gift to be able to rule that kind of stuff out. They're thinking about it in Europe because there is not enough energy to go around. And if we are truly going to be serious about bringing down our energy costs, one of the ways that we're able to do that is either we produce our own energy, which can't be done overnight, but in the immediacy, we have to reduce the energy that we use. That's just simply what needs to happen. So unless we're able to do that, and we're able to bring down the inflation number, particularly when it comes to the energy price part of that equation, I hate to think where interest rates can go. And I don't mean to scaremonger, but that's just me looking at the situation and saying it as I feel it is right now. It is pretty scary. Someone's saying here that if they've personally seen best offers at 5.18 on 220K, 10% deposit, 25-year mortgage, 1,158 per month. For a lot of people, I imagine remortgaging is going to be impossible after Bank of England rate rises in November. Mate, you hit the nail on the head there. This isn't being spoken about right now, but this potentially can be catastrophic for a lot of people. So look, the moral of this is you need to take action right now. Don't wait, ponder, procrastinate. Don't do any of that. You need to be decisive, because if things go up as we expect them to continue to go up, there's going to be a lot of pain for a lot of people. And that's where I want to leave this video. I know it's not overly positive, but let's just cover the news as it is and say it as it is. And unfortunately, that's the way I see things right now. And it is a little bit concerning. And I hope that you found this useful. If you have, please smash the like button. And if you're watching this on replay, you're not subscribed to the channel, maybe consider subscribing. I'll continue to do lives just like this to keep people informed and share some thoughts and some tips. I appreciate every single one of you. It is Friday evening, so thank you so much for joining me. Have a great weekend, and I'll see you next week. Cheers.